Hundreds of millions of US dollars are at stake. Something terrible is going on behind the scenes. I cannot believe it is actually happening. We have just 24 hours left for something literally catastrophic. This is a very urgent video, so let's not waste a second and get straight to the point. Disclaimer. In the volatile world of cryptocurrency, recent weeks have been a roller coaster ride for investors. Just when it seemed like the market was on the path to recovery, another crash shook the scene, leaving many scratching their heads in disbelief. Yesterday's plunge sent shockwaves through the crypto community as prices tumbled once again. But what's been driving this wild ride? As you remember, 2 months ago, the approval of the first ever crypto ETF, particularly the Bitcoin ETF, opened the floodgates for investment into the crypto space. This influx of capital, amounting to hundreds of millions of dollars every single day, sparked a frenzy, propelling prices to unprecedented highs. Bitcoin, in particular, saw a meteoric rise, smashing through the $70,000 mark and beyond. And this is very important. Bitcoin's dominance as a key player in the current crypto market run cannot be overstated. Its every move sends ripples throughout the entire space, influencing the trajectory of other assets, especially Shiba Inu. We've witnessed firsthand how closely Shiba Inu follows in Bitcoin's footsteps, as its fortunes ebb and flow in tandem with the king of cryptocurrencies. The significance of Bitcoin's role cannot be ignored, especially when considering Shiba Inu's recent meteoric rise, with gains exceeding 200% in just a week. This demonstrates the interconnectedness of the crypto market and the profound impact of Bitcoin's developments on its counterparts. But still, what happened during the last 24 hours that made all the crypto prices crash again? That is a very good question. Just when it seemed like the crypto market was finally catching its breath, a wave of relief swept over investors. After enduring the frustration of continuous crashes, hope flickered as signs of recovery emerged on the horizon. However, this optimism was short-lived. Despite initial glimmers of hope, the market swiftly spiraled back into chaos. And the reason is that yesterday marked the largest outflow from Bitcoin ETF during one day in history, totaling a staggering $154 million. This massive exodus from ETFs triggered a domino effect, prompting a significant sell-off of Bitcoin. The repercussions were felt across the entire crypto space as prices plummeted once again. It's noteworthy that this isn't the first time such a scenario has unfolded. A similar event occurred on March 1st, albeit on a smaller scale. However, yesterday's outflow dwarfed previous occurrences, amplifying the impact on Bitcoin's price trajectory. But how long will the crypto market continue its downward plunge? And why did the flood of investments into Bitcoin ETFs suddenly stop? Is this the end of the road, or is there more to the story? Well, let's find out. A Twitter user gave a pretty good explanation sounding the alarm about Bitcoin's impending journey into what they dubbed the danger zone just before its halving. The tweet, brimming with statistical data, painted a grim picture of historical retraces and potential market downturns. The tweet reads, "In one day, Bitcoin will officially enter the danger zone, orange, where historical pre-halving retraces have begun. Historically, Bitcoin has performed pre-halving retraces 14 to 28 days before the halving. In 2020, this retrace was minus 20% deep and began 14 days before the halving. This retrace lasted only a few days, but preceded an over 150-day reaccumulation period before Bitcoin broke out into its parabolic uptrend. In 2016, the pre-halving retrace was minus 40% deep and began 28 days before the halving. This retrace lasted 8 weeks in total before Bitcoin broke out into a parabolic uptrend. Currently, Bitcoin is approximately 29 days away from the halving and has pulled back minus 11% last week. This ominous forecast suggests that Bitcoin could be on the brink of a significant downturn, echoing historical patterns observed before previous halving events. The stark statistics paint a sobering picture of potential retracements and prolonged periods of market turbulence. So now you might be thinking, okay, that makes sense. People expect the crypto market to drop even more, so they are selling their crypto assets to buy it back later for a cheaper price. But it is not that simple. Not at all. Despite the logical expectation of investors selling off their crypto assets to capitalize on anticipated price drops and then buying back at lower prices, recent market behavior presents a perplexing contradiction. Instead of witnessing an influx of assets into exchanges, we're observing increased outflows. This puzzling trend raises questions about the conventional wisdom of selling high and buying low. It quite doesn't add up. If individuals were truly looking to sell off their crypto holdings in anticipation of lower prices, we would expect to see a surge in crypto inflows on exchanges as they seek to execute their sell orders. However, the reality is quite the opposite, with significant outflows from exchanges indicating a reluctance to part ways with their assets. The same perplexing behavior extends to some of the Shiba Inu whales, exemplified by yesterday's instance, where an unidentified entity withdrew over 500 billion Shiba Inu tokens from Coinbase. So, what is actually going on now? It all simply doesn't add up. Well, the potential reason behind the contradictory market behavior may lie in a revealing tweet that sheds light on a fascinating phenomenon. According to the tweet, Bitcoin continues to flow from holders that hold 0 to 10 Bitcoin to now holding 10 to 100 Bitcoin. This observation suggests a strategic shift among some of the whales, who are actively accumulating cryptocurrency assets despite the ongoing market downturn. This intriguing strategy defies conventional wisdom. Instead of selling off their holdings in anticipation of lower prices, some whales are doubling down on their investments, steadily increasing their positions. Rather than succumbing to fear and panic selling, they are adopting a forward-thinking approach, building larger holding bags even as the market faces turmoil. The rationale behind this unconventional strategy becomes clearer upon closer examination. By accumulating crypto assets while prices are low, these whales are positioning themselves strategically for potential future gains. They recognize the historical precedent that follows Bitcoin halving events, where crypto prices have historically skyrocketed. In essence, these whales are playing the long game, anticipating a potential market frenzy post-halving. Rather than being deterred by short-term fluctuations, they are leveraging the cyclical nature of the crypto market to their advantage, preparing for the inevitable upswing that often follows periods of consolidation and retracement. This strategic accumulation of assets underscores the sophistication and foresight of institutional players in the crypto space. While retail investors may be swayed by market sentiment and short-term fluctuations, some whales operate with a deeper understanding of market dynamics, positioning themselves strategically for long-term success. This serves as a reminder that while market volatility may induce panic among retail investors, institutional players often have a clearer vision and strategy for navigating turbulent waters. But let's bring the focus back to Shiba Inu. Now you might be wondering, what will Shiba Inu price be post-Bitcoin halving? It's a question that's been on many investors' minds, especially given the recent market turbulence. And the answer might just surprise you. Leading on-chain metrics and price prediction firm CoinCodex has offered a rather optimistic outlook for Shiba Inu. According to their analysis, Shiba Inu could see a staggering rise of up to 225% in the wake of the Bitcoin halving. This forecast suggests that Shiba Inu has the potential to not only surpass its previous all-time high, but also reach new heights, potentially breaching the 409 level. For investors who have weathered the storm and remained steadfast in their support of Shiba Inu, this prediction could be a cause for celebration. After enduring a prolonged period of stagnation and volatility, the prospect of finally breaking Shiba Inu's all-time high, which has eluded the token for over 2.5 years, is undoubtedly a welcome development. However, it's important to approach such forecasts with a degree of caution. While optimistic projections can inspire confidence and excitement among investors, they should be viewed as potential outcomes rather than guarantees. The crypto market is notoriously unpredictable, and factors such as market sentiment, regulatory developments, and broader economic trends can all influence price movements. And with that being said, the forecast for Shiba Inu's post-halving performance offers a glimmer of hope for investors who have remained steadfast in their belief in the token's long-term potential. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.